Yes, food inflation has been impacted by the global shocks, but as well as the local currency shocks. So we have a bit of both. The measures that were announced by His Excellency and the other subsequent measures will go a long way in putting a damper on those price hikes. What you are seeing in terms of inflation is really the delayed effect of what happened before. We should see going forward a bit more stability coming out of the measures that were put in place, including the idea that now the policy that from now on, in terms of some basic commodities, citizens or whomsoever can bring in those from whatever source they find affordable from outside in the main. So opening up the borders in that way will help also push down our prices. But also, as I said, it's important for us to boost productivity. If you look at cooking oil, for example, productivity in sunflower, even in maize can also be used for producing a cooking oil, and not just soybeans, which we tend to import. And also let's invest more in cotton production, because then the linseed oil can be extracted from the seed, this cotton product. So clearly we have to do some investment locally to deal with some of these food shocks, as well as open up borders so citizens can import from elsewhere. All this will go a long way in dealing with prices, but we've done a lot as well in trying to make sure that we limit the speculation that's taking place around our currency, whether it's action on the stock market, action on the banking sector. We are doing a lot to try to make sure that we stabilize the situation. But every country in the world is feeling some shock. Whether you're here in Switzerland, just look at the price of fuel here in Switzerland at about $2.25. In Zimbabwe, definitely lower than that. So you can see the impact of the at least the fuel issues, and that transmits into food inflation. So every country in the world is reeling from the global shocks, as well as some domestic shocks, depending on which country they are.
We have seen, you spoke earlier about the exchange rate. We have seen now that the auction rate and the willing buyer, willing seller rate, they're almost close. I think there's a difference of about $5 now. And so do you see us moving away from the auction to the willing buyer, willing seller, or are there any measures that are going to be put in place again to try and maybe consolidate the gains that we are seeing between the two platforms?
As a government, we're committed to a market-based exchange rate. The Excellency announced this in the measures that he announced, and we're all committed to that. So, and this is what we're seeing in terms of the convergence between the willing buyer, willing seller rate and the auction rate. So really it's one rate, so it doesn't really matter which one it is, as long as they are moving together in tandem, and that's critical, so we don't open up some arbitrage opportunity there as well. Also, you notice that in terms of what was sold on the market is 25 million US dollars, and that's really what we can sustain going forward in terms of the surrender amounts from exporters, in terms of the 40-60 rule or thereabout, but also from the 20% surrender from domestic transactions and whatever Treasury can chip in from week to week. So 25 million is what we can sell, and we've decided we will not create a backlog or allow one to happen. We're busy clearing that backlog. So clearing the backlog, selling what we have, make sure the exchange rate is market-based, and making sure the arbitrage gap is minimized. All that will go a long way in building confidence in the market that truly the market forces are at play, and that will go a long way then in making sure that the parallel market doesn't run away the way it was done before and drive prices on our shelves. So all that is part of the strategy.
And have you had a chance to track the amount of money that is trading on the willing buyer, willing seller platform?
Oh, I can't give you a figure at the moment, frankly. I can't give you a figure, yeah.
That's all right.
I mean, the thing that we're trying to achieve with the willing buyer, willing seller window is a price discovery process, an efficient price discovery process, rather than really the amount that's traded on that market. But of course, our expectation is that over time, then it becomes the dominant market for accessing our foreign currency, including at the auction itself, in terms of the price at which then the auction resources are accessed by those who need to import. So that's what is quite important. It's the price discovery process.